In this video, we're diving into SoFi stock and why it presents an exciting investment opportunity for the near future. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi Technologies has shown significant potential as it continues to expand its business operations and strengthen its financials, setting the stage for notable growth. Despite facing some challenges over the years, SoFi has achieved consistent quarterly profitability, meeting one of the main requirements for potential entry into the S&P 500 index. The momentum is strong, and the future holds promising prospects, particularly with anticipated new highs by 2025 and considerable growth potential in 2024. SoFi has weathered a prolonged period of limited stock movement despite showcasing strong earnings. The company's performance aligns with strategic growth and efficiency. SoFi has streamlined operations and expanded revenue streams, diversifying beyond lending to emphasize its tech-driven approach. This shift is pivotal as it positions SoFi among tech-driven financial service providers. Although traditional banks have low multiples, SoFi targets the software-as-a-service (SaaS) valuation range, which often attracts higher price-to-sales multiples. Given the significant expansion in fee-based revenue and SoFi's broader business model, many investors see a fair value for SoFi stock at around $18. Such a valuation could translate into substantial returns, especially if SoFi continues its trajectory toward meeting the qualifications for S&P 500 inclusion. Currently, SoFi's stock movement is drawing interest due to recent financial milestones. Achieving 4 consecutive quarters of profitability is a significant accomplishment. The company now focuses on building its market cap to meet the required threshold for S&P 500 eligibility. With shares outstanding slightly above $1 billion, reaching a market cap of $18 billion would require a stock price around $18, which aligns closely with its fair valuation. This valuation uses a conservative price-to-sales multiple of approximately 7.2, considering SoFi's solid earnings growth. Many tech companies with SaaS characteristics enjoy higher multiples, which reflects optimism for future scalability. The journey towards the S&P 500 inclusion could increase SoFi's stock price substantially. Historically, stocks newly added to the S&P 500 experience a price boost, often referred to as an inclusion premium. If SoFi reaches the required valuation, there could be an additional $10 per share gain from this premium alone. For SoFi, this could mean a leap from $18 to $28 following S&P 500 entry, sparking more investor interest and institutional buying. SoFi's management is committed to operational efficiency and growth, aiming to reach a mid-2026 target that may see the stock reaching $45, which aligns with their strategic objectives. SoFi's potential price increase, however, will likely encounter moments of volatility. Short sellers have shown significant activity, trying to contain the stock's upward movement. Nonetheless, with SoFi's improving fundamentals, these short positions may result in rapid, unexpected increases as short sellers exit their positions. These abrupt shifts could lead to single-day gains of around 30% or more, which could occur as short interest falls. Investors who understand SoFi's long-term strategy can benefit by holding through these fluctuations, as selling prematurely might mean missing out on substantial gains from these sharp price jumps. Market analysts often underestimate SoFi, labeling it as a mere lending company. However, SoFi's growth strategy places it within the tech-driven financial services space, significantly reducing its reliance on traditional lending. Lending revenue has decreased from 99% to around 50% of total revenue, showing the company's commitment to a diversified model. This shift towards technology services and fee-based revenue streams differentiates SoFi from traditional banks, placing it closer to fintech and SaaS valuations. SoFi's expanding membership and innovative service offerings contribute to revenue growth of over 30% annually, while other financial technology firms struggle with profitability. This performance reinforces SoFi's position as a key player in the sector. When evaluating SoFi's fundamentals, its revenue growth remains a critical aspect, especially as the company continues to reduce dependency on lending. Comparing SoFi to other companies in the sector shows that its revenue generation per member is increasingly efficient. SoFi is outperforming competitors in terms of growth, profitability, and value. The company's revenue model allows it to maintain strong momentum, with recent quarters reflecting solid performance. Unlike competitors reporting losses, SoFi has remained profitable, positioning it favorably in the fintech market. While some competitors trade at high multiples despite losses, SoFi's valuation remains attractive at a fair price-to-sales ratio, offering investors a promising entry point. The recent federal rate cuts could further benefit SoFi, as they have historically fueled growth in lending and financial services. Rate cuts make borrowing more affordable, driving demand for financial services. SoFi is well-positioned to capitalize on this environment, and its flexible platform can cater to increasing consumer demand. With each rate cut, SoFi's revenue potential grows, creating a foundation for even stronger profitability. The company's trajectory suggests substantial returns, especially if it continues to expand its tech platform and diversify income sources. SoFi's institutional ownership recently hit a record high, with more major funds increasing their stakes. Notable institutions continue to add SoFi shares, reflecting growing confidence in its potential. Major financial players, including Morgan Stanley, have recently increased their positions, solidifying their commitment to SoFi's growth story. This level of institutional interest demonstrates confidence in SoFi's direction and supports the stock's value as the company pursues its growth objectives. An analysis of the top 10 institutional stakeholders shows balanced activity with recent buy-ins by Morgan Stanley, which raised its holdings by 5.6%, and Dimensional Fund, which increased its position by a significant 88%. This upward trend in institutional ownership contributes to SoFi's solid foundation, suggesting potential price stability and support from large investors. ARK Invest and Sumitomo recently reduced their positions slightly, yet other major institutions, including Vanguard, BlackRock, State Street, and Geode, continue to hold significant shares. Institutional investment reinforces SoFi's appeal in the financial sector, emphasizing its role as a tech-based finance company. Looking ahead, SoFi is well prepared to execute its strategy, with significant developments on the horizon that could accelerate growth. For investors, the current price offers an attractive entry point, particularly as SoFi moves closer to a valuation of $18 per share. The growing fee-based revenue, 4 quarters of profitability, and expanded tech platform highlight SoFi's capabilities. While it may experience ups and downs in the near term, SoFi's long-term outlook remains positive as the company strengthens its position in the financial tech market. The next few quarters will be crucial as SoFi aims to meet its goal of S&P 500 entry and further expand its services. Continued profitability and solid revenue growth set a strong foundation for future valuation increases. If SoFi manages to secure a place in the S&P 500, this milestone could propel the stock significantly higher. Institutional and retail investors alike recognize SoFi's potential as a key player in the evolving financial sector. As a result, patient investors may find substantial value as SoFi continues its upward trajectory. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.